Yeah, I don't know that there's much fallout directly on Tesla, to be honest with you. I mean, I think the bigger thing for me is just like continued Elon sales. You know, I don't think there were any Form 4s yesterday either. So hopefully we're done here, but that's caused a huge amount of pressure. And I think, really upset a lot of investors too. So it's, to me, like the underperformance comes down to just how much he's sold in the last couple of weeks.
Yeah, absolutely. And we're getting to the point with Tesla, like it's because of the split, it kind of clouds memory, but pre-split, this is like 600, 500 and, $60 a share we got down to, $540, something like that. Like we were down to 180. So that's pre-split 540. Yeah. I mean, that's pretty low, like thinking about historically. And, 2 years ago, everyone who's bought Tesla for the first time in the last 2+ year or about 2 years is probably underwater, and so that's hard to accept. I think that's hard to swallow for a lot of these retail investors that are so important to the sentiment of Tesla, especially. And so I feel, when you see your investment go up, and the retail investment community for Tesla has probably tripled in the last 2 years, maybe more. I don't know. There's probably some way to measure it, right? Based on like number of state.com questions or whatever it is, the number of just YouTubers. There's like 10 times as many YouTubers on Tesla. So if that's any indication, there's 10 times as many retail investors, but 90% of them are underwater now on their Tesla investment, right? If that's the case.
And they might have had a paper gain of 50%, and now all of a sudden it's a paper loss of 50%.
Yeah, it's if they bought at 1,200 or 1,000, how many people bought above $1,000 a share?
Yeah, a lot. Yeah. But I mean, that's the $1,000 a share. Like we were so close to that just a couple months ago.
Yeah,
we were like 310 in September, I think it was, or 315, somewhere in that neighborhood. Which split adjusted is just shy of 1,000. So I don't know. Like part of me thinks that these multiples that we're trading at right now are just so low. I mean, I forget what we are now on the forward, but it's like
in the 30s,
like 30 or something like that. Or it was like down to 20.
And Amazon's like 60 or 50 or I don't know. It's like way higher, and it's not. Yeah.
So I don't know. It's a question for me of can those low multiples be sustained, and if they are, which I hope is not the case, but then Tesla will. The price will kind of be dependent on how they perform in the coming quarters. So
yeah, and we had a good discussion with some local Tesla investors last night who met up with us at a local bar here, and we were chatting. And they were very well informed, and a lot of them were from mainland China even.
Yeah.
And so we got some good perspective. But that's the risk, right? The Chinese economy and the competition, and how commoditized that compelling EVs have become in China. And so the Chinese Shanghai factory margins could get compressed significantly. The economy there, is it strong enough to even warrant the demand needed to fulfill supply in China, at these current prices? It's a big question mark, right? But I think the consensus was that the rest of the world, Europe and North America in particular, there's no problem with that. That's not the same risk there. Even though there's a recession in Europe and in the US, just the value proposition versus competitive EVs and where the rest of the world is on the EV adoption curve. I think China's like 25% adoption or something already for new cars being EVs. In Europe and the US, it's closer to 10%. So there's a longer runway, the rest of the world for sure, to catch up to where even China is now. And it's not even close to comparable EV products in the rest of the world outside of China. So, how do you compartmentalize that in the overall risks of Tesla, margin compression and so forth? What did you think about all that discussion, man?
Yeah, I mean, it's something that people have been talking about for a long time now. I mean, there was that rumor of like a 17% price cut or something, which Elon refuted recently.
Yeah, from Reuters or something.
Yeah. Well, and Troy Teslake had been talking about sources that are indicating that there's price decreases coming. So I mean, I think it's a legitimate concern. Now, obviously that one rumor was not right, but I think the fierce level of competition in China is nothing to sneeze at. So we try to be middle of the road with all of our analysis, and we're that kind of realistic middle of the road attitude that we've had has led us to be bullish on Tesla. But this is one area that I think does warrant some caution. But in my mind, it just comes down to margins. So like if you have to cut prices, well, then their made in China margins might go from, I don't know, like 35% to 25% or something like that, depending on the severity of the cut. So which is frankly like kind of consistent with what we've been assuming already. So it's just like, how granular do you want to be on the level of the cut? And it's possible that we've seen our peak gross margins this year until the point where FSD take rate really increases. So that's something to maybe keep in mind.
Yeah. I mean, that's the bullish thing we all talked about too, is the FSD take rate, right? And sooner or later, it's going to get good enough where the take rate materially improves in the US and then gets expanded to Europe. China is a wild card. We don't know how, if, when it'll be adopted in China with, the government regulations there being a wild card a little bit. Maybe it will be fine there, or maybe they're going to put a halt to it there. I don't know. But in Europe and the US, eventually, the other parts of the world, there will be some amount of adoption of FSD. And in the US, I think we've deduced, Tesla doesn't give it out, but it's like somewhere between 5 and 15%. Let's call it 10%. But that we'll be able to deduce in quarters to come at some point, that creeping up from 5 to 15% to 10 to 20% to 15 to 25%. It'll become a common question or thing, I think, that analysts will be asking. What's the current? How do we predict the take rate? It'll eventually be like 40 or 50%, but it'll be over sequential quarters. And I think when that becomes the hot topic, and Wall Street even starts talking about it, like, oh, what's the adoption of the FSD? Because that's just pure margin, and maybe they'll increase the price again, as it gets better too. So I think that's going to be a huge, windfall for the Tesla stock price at some point towards the end of next year, because it'll take a few quarters for it to show up in the financials. That's my kind of guesstimate. But that's exciting. But when we talk about the Tesla valuation, we don't even include that kind of call option that we see highly probable to materialize, right?
Yeah, I mean, we have like a very conservative base case essentially that's just based on manufacturing essentially, and that's what gives us so much optimism though. It's just that our kind of base case assumption with very little upside baked in, almost no upside baked in, other than just kind of continued volume growth, results in really, really drastic earnings growth. I think the numbers that Wall Street is projecting for next year, I'm pretty sure Tesla's going to blow those out of the water, even when you don't give any upside optionality to FSD take rate or those other things. So I'm optimistic. It's just how much pain we have to endure before it becomes obvious to the rest of the market what seems so obvious to us.
Yeah, and a big data point on this FSD data, FSD take rate prediction is in the next couple of weeks, the early adopters getting version 11 and showing their YouTube videos of it. And then I'm in like probably a few weeks behind that. I'll get it eventually, but I'm excited for those data points to see the YouTubers showing what they think about it. And then me personally using it. And then that'll inform my kind of prediction on like where we are on this curve.
Yeah.
Right.
Yeah. Single stack. I mean, that's the version 11. Elon's been talking about single stack for so long. It's like I almost forgot that it was coming, and then it's just like, oh, version 11, single stack. Oh, that's awesome.
Yeah.
So I wonder. I kind of think that they are going to recognize the deferred revenue balance, at least for the U.S. customers this year or this quarter. What do you think? Fourth quarter.
Yeah. It
seems single stack, like the one that they'll say, okay, you know what, it's going out to wide release, presumably. I don't know. Maybe it's wide release.
Yeah. I mean, I don't know much about the accounting methodologies, metrics. That's what I have you for, to be like the expert on that stuff. I mean, I know a little bit. I know who to go to, and I know you're an expert. And I also know James Stevenson. He's incredible. He had a great short video on something recently. It was funny. I was telling Matt about. But he, in the past, has been, I forget what his justification was, but it seemed to be well thought out that Q4 last year, because of Q4, it makes sense to make this accrual or this thing happen. And so it would make sense that if it's going to be a Q4, it would be this Q4, right? I mean, next Q4, I think year would be too late if it's going to be a Q4. So just based on you and him, and I think there's a significant chance it'll be this quarter, this Q4. So yeah, we'll just have to see how wide, if they really get to wide, the full wide release in December, like Elon I think he semi-promised it. I don't know if he, it wasn't like a hard promise, but he seemed highly certain, right?
Yeah. Yeah. So we'll see. I mean, Elon's optimism is kind of hard to reconcile with like how long all these FSD, developments have taken. So I'm really curious to see what single stack looks like, and then what the iteration rate looks like from there.
Yeah. Yeah. So, I mean, Elon Musk, I'm just checking, refreshing the Twitter, every time I look down, every once in a while, I'm checking, he's tweeting, you know, he's tweeting, and sometimes we get these live breaking news things. Like one time he said, "I'm buying Twitter on our tweet." Was that it? And then FTX went down like live. And so I feel like we have good luck with live crazy news stories. But he's just responding to different people's tweets, like being kind of funny. So
Ligma and Johnson.
Welcome back anytime.
anytime.
Yeah, and he's talking about like the people that are fired, if they're talented, they should get a job somewhere else. It's fine with him, or stuff like that. So he's obviously very focused on Twitter right now, and that's okay. He's like living at the Twitter headquarters. In my mind, that's okay. I kind of expected that. I think it's Tesla, I think, is going to do just fine without Elon sleeping on the floor there, living at the Austin factory. And I think it's just, he still keeps tabs on everything going there. He's got great management teams in place, and I still think he's focused on keeping FSD beta moving forward on track, and production and supply chain. Anything major, I think he just knows how to delegate better than anyone, right? I mean, there's no way he could do what he's doing, CEO of 3 companies at the same time.
It's ridiculous. 3 major companies.
Yeah. So you have so many people pushing back on Twitter. So many Tesla are so upset about it, because you have to believe. I heard someone on Farzad's channel. I can't remember the guy's name, but I've talked to him. Nice guy. But he gave the litmus test is, okay, would people be upset with Elon doing what he's doing with Twitter? Would Tesla shareholders, would there be as many upset Tesla shareholders with Elon doing what he's doing right now if by happen chance Tesla was trading, at $350 or $400 a share right now instead of $200? I doubt it.
I don't think so. I don't think you'd hear a peep from anyone.
You wouldn't hear a peep. That's right. Yeah. So it's entirely because of the stock's going down. You have to attribute it to something. Oh, it's Elon, what he did. And there's probably some truth to that sentiment, uncertainty, but it might just be a great buying opportunity. And when we look back in 5 years, it'll be a blip on the radar, you know? So if you're a long-term investor, I'm not worried whatsoever. But if you're short-term with options and margin, it's very, stressful for sure.
Yeah, Farzad's in the chat there. He says it was Richard who goes by Borghand on the chat. Yeah, he's a regular on those Friday live streams.
I've listened to a couple of them. I pop in and out. Yeah,
I can't wait to see the Farzad stash, and he's got a great live stream with Sandy and Jordan Giesecke coming up today. So I can't wait to see that one.
Yeah, I mean, I was thinking, I think, I don't know if you saw my chat, but on the channel, like, Farzad, man, you got to get on the Twitter Spaces and support Elon at the same time as the YouTube. It's not too hard when you have 3 of you guys. And there's the wild card of Elon might just pop into your space. I mean, he wants to make the product better, right? I mean, he's going to pop it. He popped into the FTX chat, and I think if enough of the Tesla content YouTubers start putting their live streams on Twitter Spaces, I think it's probable at some point in the next year, Elon will be popping into some of those at some point, randomly. That'd be super cool. Like, what if he would just show? I'm looking. Elon? Are you there? I'll put you a speaker. Nope, not there. We have 78 people on our Twitter Spaces. It's tiny.
Yeah, it would blow up. If all of a sudden we have like 800,
if we have 1,000, maybe Elon would be there. Maybe, but we have a few hundred on YouTube Live, which is fine. But eventually, Twitter Spaces is going to blow up, I think, and Elon wants that to happen. And it's exciting.